G'day guys, Seeney here, and welcome to another episode on the Australian Wealth channel. And in this episode, we're going to be talking about the future of this channel. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. So you might have seen recently that ASIC actually put out some guidelines regarding financial influencers, so to speak. And these are guidelines that are incredibly broad and basically prevent anyone from talking about financial products. So a financial product is something like a brokerage or talking about certain stocks or securities, something like that. So any kind of talking about stocks is not going to be allowed in the eyes of the law. So I don't think this is the best move from ASIC, obviously, because it prevents people from talking about a well-diversified portfolio. So what that means for this particular channel is that this channel is going to have a much more of a property focus going forward, because we can talk about facts to do with the stock market, but you're kind of limited only by just talking about that and not talking about opinion. However, property is not regulated as a security, and cryptocurrency is neither, which seems kind of counterproductive, because a lot of the scams and pump and dump schemes that have been happening have been in the crypto community, which isn't regulated at all. So because property is one of the things that I understand a lot about, that is what I'm going to be talking about on this channel going forward. So as a result, that means that I'm actually going to be helping people to get to a point where they can get invested in property, because it's been one of the most powerful drivers of my wealth as I've gone through the last probably 5 years or so. So property on the outset can seem really daunting, but once you get the process understood, it's actually quite simple and straightforward. There's just a few steps that happen there. So I'm going to be taking on people, I'm going to be helping them with getting them into a place where they can actually go out and they can buy an investment property. So this is a new service that I'm going to be working through. It's something that I've spent a lot of time on myself, and I want to tell you a bit of a story about my latest investment property. So today, the day that I'm actually filming this video, I've just had a new property settle. Now this is one that we got under market value and is cash flowing very positively. So we're already in the green massively in terms of capital growth. And of course, the property is more than paying for itself. Most of the time on this channel, I've talked about purchasing houses because houses seem to have more capital growth over time than units, things like townhouses and apartments, properties like that. So why is it that I actually went and bought a townhouse this time? Now, the thing is, if you want to continue to grow a property portfolio, it's prudent to have a couple of different types of investment in that portfolio, but there is a much more important reason too. Now, one of the main reasons that this property I decided to go with a townhouse is because of not only opportunity, but also because of cash flow. Townhouses and units traditionally have a much better yield than houses. Now, I'm starting to get to the point where my borrowing capacity is getting maxed out. So it's important to know that if you want to continue to grow a property portfolio, there comes a point where the bank's going to say, hey, you need to start paying down some of this debt. So because I want to continue to grow my property portfolio over time, it's important that these rentals that I have going forward have really strong cash flow. And this is something that I've talked about in previous videos about houses, but this is one that cash flows incredibly well. So I wanted to speak about this one. But on top of this, this is a deal that came to me from my buyer's agent, which is about 50 grand under market value. And the reason that I managed to get something brand new, 50 grand under market value, is because that the property was under contract with someone else, but unfortunately their finance has fallen through. And because their finance has fallen through, this is an opportunity that's been presented to me to be able to pick up. So These are townhouses that are completely finished. They're in the Springfield Lakes area, so really happy to be getting a bit of diversity amongst Brisbane as well. I think it's a market that's going to continue to grow quite drastically into the future and has some great infrastructure spend going in, which is only going to raise the value of prices all around the place. So not only was it a great deal that we've managed to get around 50 grand under market value of what it would sell for if we didn't have it under contract from the builder, but on top of that, it's going to cash flow really well, which is so important going forward, because as you start to get a few properties under your belt, you start to hit your borrowing limits. Banks will be a little bit more tedious and a bit more difficult about lending you money, because obviously the more money you borrow, that's a little bit higher risk for the bank. So as this starts to happen, it's really important that your properties are continuing to cash flow, and you're paying down some of the debt as well. So these particular properties, I'm swapping them all over to principal and interest, so we can get rid of some of that debt going forward. Interest only is great for being able to grow a property portfolio fast, but in a situation like this where interest rates may go up because inflation might continue to grow, then it is prudent to start paying down some of that debt so you're less exposed to it. And that way, if you pay down enough debt, you can always look at reducing your payments and things like that if things get quite difficult, which thankfully we're not in a situation anywhere near like that. So it's always prudent to be paying down debt, because it's an amazing tool, but debt is very much like fire. If you play with fire too much, you can get burned. The same thing happens with debt. But of course, on the other side, it's also a very helpful tool. You can cook things with fire. With debt, you can grow your net worth significantly faster. So this is the reason that I've taken on this debt for these properties, because it's continuing to grow my net worth and provide me money. Because as you know, there's two different types of debt. We've got good debt and bad debt. Bad debt being things like credit card debt, things that's not producing you money, it's taking money away. Good debt is producing you money through assets. This is a property that we are buying for about $460,000, and this is a property that will sell for just over $500,000, around that 510 mark, because the Brisbane property market has just been insane. So that's the price that we're paying. Now, this is completely a cash out refinance. We're getting the money for the deposit from our other property up in Brisbane. Because the values have grown so much, we're able to pull out a little bit of cash and we can go and invest that in this deal. So this is all money that I haven't had to actually work for. It's all just been from the assets that we own. So we're in the deal $460,000 in debt. So roughly those are payments of interest only, say, of around $1,100. If you're looking at principal and interest, that's going to be a little bit more. So this is a property that will rent for $450 at the minimum, all the way up to $500 on the top end per week. So if we look at that and we break it down, that's roughly $2,000 a month. We're paying $1,100 something in interest, and we're making a rental return of over $2,000 a month. There are a few other fees that we have to look at, including body corporate and things like that. Thankfully, they're not too high, so it doesn't really detract from the massive amount of cash flow that this property is producing. So we're getting paid to hold this asset, just like the one that we're doing in Monopara as well, down in South Australia. So holding this asset is going to provide us with a lot of cash flow, and it's going to be paying for itself in a very drastic way too, which is great. It's very highly cash flow positive, and I think that's something that's really important going forward, because we're in an environment where interest rates could go up. And when interest rates go up, it means that your payments are going to get more expensive. So you need to be buying properties that are highly cash flow positive. So properties like this, they have a fair bit of equity in the deal already. So this is one that I am really excited about. It's basically finished construction, so we'll have a tenant in it straight away. The vacancy rate of this particular area is incredibly low. It's under 1%, which is fantastic when you're looking to get this filled with a tenant. So this is going to be property number 4. You can see today I'm shooting on a green screen. I have access to one of these, which is fantastic. So it means I'll be able to show you some nice drone footage over the back of this image of the area that we are buying into. So going forward, this channel is going to have quite a significant property focus. And this is, of course, because of the ASIC guidelines. We don't want to be busting any laws, no matter how wrong I might believe they are. But, we, of course, need to follow the law. So property is going to be the way forward forward for me. And to be honest, that's been a much bigger driver of my net worth over time anyway. So I think it's worth people taking a look at property and getting invested there once you're in a spot where you're really stable and financially ready to be doing something like that. So if you are interested in getting an investment property, we of course have access to just a few investment deals at the moment. Of course, it's a little bit hard to find them at the moment because stock is very limited, but they are out there and we are happy to connect buyers with great projects so that they can grow their wealth over time, as I have done. So if this is something you're interested in, please get in touch. My name is Seeney. Thank you so much for watching. Please make sure you like and subscribe to this channel. I'll be talking a lot more about the property market going forward, as I said. So if you'd like to track your net worth, I have a link to WeMoney in the description. If you sign up, you get $5 just for connecting an account. It's the app that I actually use to track my net worth. And as it grows over time, I can see that growth because it's connected to all my bank accounts, which is phenomenal. So thank you guys so much for watching. Please make sure you like and subscribe. My name is Seeney. We'll see you later.